This video covers project financials within Project Lifecycle Pro. How are the project costs and benefits recorded, managed, and reported? We are in the Big Dog Roofing Company demo environment, and we are logged in as Paul Mastiff, one of the project managers at Big Dog. Paul is in Project Lifecycle Pro. He's going to open the Dollars Cloud upgrade project. Big Dog currently has a financial system called Dollars, but it's a desktop version, and they will now be upgrading to the cloud version. Paul is running the project. So he opens the project, and then he goes to the Related tab, and there's a section called Project Financials. Now, each project will have one project financial record and only one record. Now, that's a little odd, but the reason it is done that way is for security purposes. This gives you the flexibility to control access to the project financials separately from access to the project. So you can have your project team member who has access to the project and various project details, but cannot see the dollars associated to the project financials. Now, you may want that for a variety of reasons. One could be you could have some sensitive benefits, such as a staffing reduction. So you may not want that advertised widely within the company, at least not early on in the project. You may not want general population to know how much you're paying for various software. So for whatever reason, you can control access to the financials when you assign the team member to the project. So if we open up Paul's project team member record, we'll see that he's defined as active. He has edit access because the read-only access is not checked. And he has financial access because it is checked. Now we can remove his access or anybody else's financial access by simply unchecking the box. The other thing is you may want sponsors or stakeholders to have access to financials, but you don't want them to actually be able to edit them. The read-only access selection is applied to both the project information and the financial information. If you select read-only and financial access, they'll have access to financials, but they can only view them and not edit them. Let's set Paul back to his original settings here. Another access issue is public versus confidential projects. We go back into the project details and scroll to the bottom. This field here marks projects either as confidential if it's checked, or they're public if it's not checked. Therefore, this is a public project, and any Salesforce users within the company can view the project. However, the default is that public users not on the project team can view the project information, but cannot view financial information. Only project team members can be given access to the financial information. So if somebody needs access to the financial information who's not on the project team, you need to add them as a role on the project team. You can add them as a stakeholder. We've talked about security. Let's go on to talking about actual financial records. So we have this one financial record sitting here. If we open it, it actually consists of two other child objects, costs and benefits. You can enter as many as 10,000 cost or benefit records. If we go back to the project financial record, those individual cost records are summed up in various categories, as are the benefit records. The summing is controlled by these roll-up fields. There's a roll-up cost field and a roll-up benefit field. We have the option to roll up and sum all the costs or all the benefits, or we can, if we choose, uncheck this box and manually maintain these totals. Now, why would you want to do that? Well, maybe you're early on in the project. You haven't built out all the individual cost records, but you want to put in a high-level estimate for reporting purposes. Or your company could have a completely different system for tracking project financials, So, but you'd still want to put the totals here to be included in the overall Project Lifecycle Pro reports. Paul's going to uncheck the roll-up cost field and recheck it. So Paul is going to uncheck the roll-up costs and he's going to manually change current one-time cost estimate. And save. Now that it's been updated, the roll-up is unchecked. It will not be overwritten when it gets rolled up the next time. Now, if Paul wants to go back to rolling up, he's just going to check this, save, and he's back to the original $10,000. So that is how roll-ups work. Now, there are various categories of the totals here. We have current one-time cost estimates, current recurring cost estimates, current project cost estimate, and baseline one-time costs, baseline recurring, and baseline budget. So you can have costs that aren't actually part of the project budget. That's why we have those differentiators there. And then the same for the benefits, right? We have a current one-time benefit estimate, current recurring benefit estimate, baselines, etc. And then lastly, we have a months to pay back that is not calculated. That to be manually maintained, but that's kind of a standard metric management uses to evaluate projects. Now, this being Salesforce, you can actually add whatever categories you want. And you can do it with both the cost and benefits. But the only thing you need to be aware of is that the roll-up functionality is driven by custom flows that are part of Project Lifecycle Pro. We've left these flows as overridable so you can clone them and modify them to incorporate roll-ups of any new categories that you create. All right, so let's dive into costs and benefits. All right, so let's dive into the costs and benefits. Paul has already added several records, cost records. He's got a license increase in the first year for the cloud version. It's a little bit more expensive. So the first year is going to be $5,000. And then he's got another record for ongoing annually for $5,000. The reason he's broken these into two records is because the project is going to pay for the first year's increase in license cost out of the project budget. But he's broken that out separately as a one-time cost. And then he's got an annual recurring starting in 2023, which is going to be paid out of normal operating budgets. And that will not be covered by the project budget. Then he's got financial systems consultants who are experts in the Dollars Cloud system. And he's got their costs split between January, February, and March. Now, why has he broken those out by month? And that's because he's generating a cash flow estimate. He knows he's got to pay the January bill for the consultants by February 15th. So he's got that date here. Then the February bill is going to have to be paid by March 15th. And then the March bill is going to have to be paid by April 15th. So now he's got a cash flow estimate built into his project. He's also got internal labor estimated because projects at Big Dog are required to allocate the time of the internal employees. But he's just got one entry because obviously that isn't a cash flow issue since they're existing employees. So let's say he's going to open up one of these project cost records. You have a simple name, put in a detailed description, the current estimate, whether the cost is actually going to hit the project budget or not. Now, this is actually just used for reporting so that when you run reports, you can run reports on the project budget versus total cost changes. Then we have a baseline estimate. So this cost actually increased by $500 at some point. You can tie the cost to releases, so you can sum up costs and benefits by release. Here's the date that the cost is actually going to be incurred. Hit the bank account. Then you can categorize your costs. And these are the standard categories within Project Lifecycle Pro. But of course, obviously, you can customize these categories to be whatever you want. No automation is built off these categories. They're just used for reporting. Same thing, you've got occurrence, annual recurring versus one time. Tax categories, again, you can customize the tax category pick list values. I'm going to cancel this out. Now let's create a new cost. So Paul currently has these financial system consultants through March, but let's say he now knows they're going to have to be extended for 2 weeks into April. So he's going to say consultant systems April. Skip over the description. So he's going to put in $10,000 since it's only half a month. It is going to hit his project budget. The baseline estimate, he's going to put 0 because when this project was approved, this was not included in the original approved budget. Going to say that he's going to be paid on the 9th. He's got to pay it on the 19th of May. Category, this is external labor. Occurrence, this is a one-time. And this is an expense for tax purposes. Not able to capitalize this project. And hit save. Now go back and view all the costs. And the total project cost estimates have increased by $10,000. So let's now add a new benefit. Let's say we have a reduction in accounts receivable labor. We'll say automated entry based on sales contract versus manual entry. Current estimate, we're going to say $30,000 a year. Let's say this was done, before the project was approved. So we'll say the baseline was also $30,000. Now, realized amount is intended to be the actual amount you realize once the project is completed. And that's for you to use if you want to go back historically and see what actually is obtained by these projects. So we're going to leave this blank for now because the project's still ongoing. Again, you can associate it to a release. So we're going to say date that this will be realized as a result of a release that's going to happen in July. So we'll say about July 28th when the start accruing benefits. Category is a cost reduction. Again, you can build whatever categories you'd like. This will be annually recurring. And tax category is that it's an expense. Save that. And we have an additional benefit. Now let's go over reporting. So we're going to log out as Paul, and we're going to log in as the CEO, who is the sponsor for this project and the one funding the project out of their departmental budget. So I've signed in as Peg St. Bernard, and here on our landing page for Project Lifecycle Pro, see $, cloud upgrade. I'm going to open that one. Now Peg has been granted financial access, so she can see the financial record. She can even drill down and see the individual costs and benefits. But Peg is a very busy woman, so most likely she's going to be using reports. So she's going to go to reports, And there's a standard report provided with Project Lifecycle Pro, which is the sponsor project costs. She's going to open this, and this report automatically filters to show only the projects for which PEG is the sponsor. And there you can see the dollars associated with the dollar cloud upgrade. The Chariot project hasn't been estimated yet, so now it's looking at 0 values. And so this includes the summing of the current project cost estimate, the baseline budget, and the budget variance, which currently is standing at $20,500. So she now knows she has an issue she needs to deal with for this year's budget. Now, of course, this being Salesforce, Peg can edit this report to show whatever value she wants, apply whatever filter she wants. But obviously the main thing is she's going to be interested in that budget variance. Now, if she had multiple projects, this blue line here would be the grand total across all projects. So she knows what kind of total budget variance she has for things hitting her departmental budget. So that is project financials within Project Lifecycle Pro.